Time for the word on Wall Street. Top investors watching your money. Joining me right now, former Gartman editor Dennis Gartman. Rebecca Walser is here with me on set. Hey, Dennis, good morning. I'm going to start with you. Looking at futures. Yeah. Hey, we had a big, futures are looking nice right now. Dow up 132, NASDAQ up 123, S&P up 21. And then we had a nice little rally yesterday for the close. Atlanta Fed President Raphael Bostic says he expects rate cuts to happen in the third quarter. But he's kind of changed his tune about that a little bit. And then we're looking ahead to that first Fed meeting of the year. That's January 30th. So I want to get your take on all of this.
It was rather surprising to hear what Mr. Bostic had to say. We have to pay attention to Bostic much more than normal because he's a voter this year. There's always a change of 4 members of the FOMC, 4 members from the regional presidents that switch their votes each year. Bostic is a voter this year, hasn't been for 2 years. And it was important because he's commonly said that he didn't expect to see a change in the overnight Fed funds rate until the third or fourth quarter of this year. He's bringing that forward a bit. Not dramatically. He said he wants to see more an impressive change in the level of inflation, definitive numbers coming out. But he made a change yesterday afternoon, and it caught the market a little bit offsides. I think that was the major reason for the strong advance late in the afternoon yesterday. Plus, there was a comment that we're going to be relying upon the Federal Reserve discount window for the first time in a while, which I was very surprised by that comment. So Bostic's comments were a change a bit in policy. And again, he's a voter this year, so we have to give him more credibility than normal.
No, and that's why I wanted to get your take on his comments. And again, especially talking about, the third quarter, because if you look at the dot plot, they've telegraphed 3 rate cuts. But, the market wants more than that. And I think we're going to probably land somewhere in the middle is my best guess on that. But I do want to bring in some breaking news that we're hearing this morning about Wayfair. We're just learning that they're going to be laying off 13% of their global workforce, 19% of the corporate team. They're trying to streamline. They're trying to get rid of some management jobs. And then this is on top of the stock is up almost 11% because, folks, when you see layoffs, a lot of times the stock rallies. And then you've got Macy's. They're closing 5 stores and laying off more than 2,300 people. They're trying to cut costs. Rebecca, this is rough. This is rough. You've got layoffs in the tech sector with Amazon, but that's like 30 employees.
Right.
And Sundar Pichai, Google telling, hey, their employees, more job cuts coming. But I think it's the consumer side of this, the Macy's, the Wayfair, that's more troubling. What do you make of this?
I agree completely because the retail is what drives. We're a consumption-based economy, Cheryl. So if the consumer is not consuming, we've got major problems, and that recession that we keep trying to keep at bay is going to come faster. We had 200,000 plus layoffs in the tech sector last year, so they probably already trimmed a lot. Obviously with Wayfair, where they acquired Bed Bath & Beyond, I wonder how much of that management layoff and streamlining is that, is them saying, okay, we consolidated, let's do some more consolidation. But still, it's an overall bigger retail story, Cheryl, that we are seeing weakness. They've maxed out credit cards. They've used the buy now, pay later. And now the bills are coming due. And like we talked about earlier, bonuses are down 21% this year and less people got them. So they don't have those extra funds to pay these buy now, pay later. And that's where the retail consumer is going to start showing weakness.
Dennis, what do you make of this? We're going to get consumer sentiment data later today.
I think Rebecca had a very good point about the buy now, pay later. I've been arguing that fact that it's bringing purchases that would have been done in 2024, brought them forward into 2023, and now the bills are coming due. Plus, credit card extensions have been extraordinary. So I'm with her. I'm a little bit concerned about the fact that so much has, I think, been brought forward from 2024 into 2023 and now has to be paid for in 2024. We are a consumer economy. Betting against the consumer has always been a rather difficult bet, but I think at this point, betting against the consumer is probably a better bet than in the past. I think the hedonism of American buyers has probably been exhausted with this buy now, pay later program.
Yeah, we got those retail sales from December that were stronger than expected. But, I always say when I report those numbers to Maria, look, that's not inflation adjusted. And to Rebecca's point, to your point about buy now, pay later, and the fact that Americans they're draining their savings. We're seeing that just to pay the grocery bills or to pay the rent. And then you've also got the credit card debt that's jumping. And, Jamie Dimon's somebody that sees that. Dennis, I'm going to give you last word today.
Stock prices, I think, are extremely expensive, and I think one of the places to take a look at owning 3 to 2 to 3 and 4 year Treasury securities are earning 4 and 5% makes to me eminent good sense, and hedge that by owning a little bit of gold. But I think stock prices are extremely expensive. However, I've thought that stock prices have been expensive since October, so I've been wrong for 2 months, and I was right for 9 months, but wrong for 2 months. And take what I have to say with a great grain of salt.
You know what, Dennis? That's a good run. I'm going to call that a victory. Yeah, we're gonna leave it there. Dennis Gartman, it's good to see you. Thank you for joining us this morning.
Always good to see you, Cheryl. Thank you.
Rebecca Walser, you're staying with us all morning long.